Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook on our big six markets for trading tomorrow, and that's actually the end of the month as well, tomorrow being the 31st, going into the end of the month here on our big six markets, and that's going to be the bond, gold, bonds, crude, the soybeans, and the S&P 500. The main objective for today and for all of these videos is to create a trade plan for tomorrow so we can best approach the markets with what the markets are giving us in terms of information. Now, before we jump into all this fun stuff here, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to sign you up for our email list so that you'll never miss a beat and you'll know every single time one of these videos comes out. We also talk about different stocks and different statistics and things to keep in mind as well, so a great little newsletter to be a part of. In the blog at the bottom, we also talk about market psychology every single day. We pick one market out of all of them and just kind of dig into what's happening that day to better understand the markets and get better as traders as a whole for the following days of trading. And then, of course, every morning we have our live trade room morning prep levels posted for the big six as well. If you haven't done so already, make sure to click on live trade room subscription and trial information. You can take a one-day trial and see what the room's all about. If you really like it, you can sign up for a subscription, and if you really like it, you can join as a VIP member, which has the live trade room included on top of everything else. Now, looking at the overall momentum that we had today, finally a breath of fresh air. We had the markets moving today. It sounds ridiculous to say, but we actually had the markets moving. We almost didn't know what to do with ourselves with the markets moving. Now, the bund overall, it had most of its movement in the early morning session. We came in and we saw a very obvious spike higher into a channel, and that was a nice tight channel working its way up. The big objective whenever you run into that type of situation is a deeper pullback. Buyers are going to be less and less and less inclined to be buying at the highs, and eventually it leads into a big pullback. That pullback generally takes place at around the beginning of after that spike in the beginning of the channel, right around that area here. And that's going to be at 161.27 down to 161.24. We do also have rising wedge support and falling wedge resistance in the way to kind of pinch price together right now. We have yet to retest the highs. We have major resistance at 161.55, respected very well so far. Now we just have to see what they want to do if it does retest. But given the overall wedge and the bullish sentiment, what I would really like to see here is a dip back down into that hot spot between 27 and 24, see if we can get a bounce and ping that thing right back up towards the highs and finish that job off through the 55 and through a new high to get a test of prior month resistance at 161.65. Over on gold, we had a very volatile day. You'll notice a lot of movement, not really much happened, right? A lot of back and forth inside here, big breakout momentum, big breakout right back in. A lot of this was due to some tweets that were coming out from good old President Trump. But some of that back and forth really just kind of landed us right back where we started, right? We started here, big breakout, big pop back up, right back in the range again, big breakout. We haven't had a big rally up or anything yet, but it does appear as though the sellers are still trying to maintain their balance to the downside. Now, the overall bearish breakout that we have a big spike up, a pause into a range, and a failure, and a lot of times that leads to a secondary leg down. So what I'm looking for is I want to see a correction that we can sell into. We have that big move down, we have a nice little wedge forming here. I want to see this break up into resistance, and that resistance is going to be at 1248.9 to 1248.2. Find selling pressure in there to shove the market back down. The one caveat to that, the one issue that may get in the way, you'll notice these big, thick, dash dotted lines at 1246.2 and 45.8. Those are last month's levels. And being that tomorrow is the last day of the month, those become very, very strong levels that we're going to have to be careful around because the market's going to be fighting over those last month levels. So if we can break through there, we're expecting a nice correction to continue lower and get that secondary leg. But if it does get stuck here, we could be in store for another one of these where it rallies back up a little further, maybe into that 1252 to 53.6 area instead. Over on the bonds, nice bearish momentum to the downside, continuing its grind lower. Zooming out, obviously, we've been bearish kind of over the past few days. Big dip lower. They did take quite a bit of it back. But when they got back towards those highs, that prior week, prior high of day level, big failure, right back down to the lows. Now, this is where it gets a little bit tricky because zoomed out like this, we can see that we're in a big area of contention. Not only is this last month support down here at 150.06 to 150.01 or so, But that's also the same area that we've already had a ton of back and forth and a lot of support and resistance previously in this month. So with all of that kind of stacking up on top of each other, it makes us a little bit nervous of continued downside pressure. We're having a little bit of a struggle down here at the prior low of day. That's not a big deal, not at least with the prior month level a little bit below that could act as a magnet to draw price back down. Not to mention that it's 150, right? That 150 level below us, kind of one of those big round numbers like 150, 175, 200. Those big kind of common numbers tend to be magnets, so we could get drawn down anyway to hit that 150 area, but we got to be a little bit careful to the downside here. I would like to see a correction. I don't want to sell down here, especially not into the prior low of day. I would rather wait for a correction up. 150.21 to 22 or so is the hot area that I'm looking for possible selling. That also coincides with last month resistance in this case at 150.22. So looking for a pop higher here, find resistance to drive it down one more time, see if we can finish that move. They may not be able to get much through that low, but if they do, I would be looking for that last month level next. So that's kind of the plan. Looking to sell, but want a little bit of a better price there on the bonds. Crude oil with a beautifully bullish day today. Nice grind higher, nice movement. A little bit of pausing inside there in the middle, but a good break away from that. And now we're starting to see a pause once again. Possible little wedge forming here with the rising support and kind of rising resistance. Not by much, though. They only made a one-tick new high. So given that weakness on the highs, there's a chance that this just cycles into a range. We can already kind of see the lows of where that range would be, and the highs are pretty much put in. So we could just end up cycling back and forth inside here, which tells us that the buyers are not interested in buying high. They're buying the pullbacks, and they're taking profit at the highs. And what does that mean? That means that there are sellers at the top, instead of buyers looking for breakout momentum like we had back here and back here. So because of that, I'm not looking to buy anywhere, towards the top edge of this. This is about as late as you can get before it starts rallying up to a high and possibly even stopping before the high. And you'll notice there's just not enough room. There's only maybe 5 to 10 ticks, so just not much. What that basically means, I'm looking for a pullback. I don't want to buy way up here. We're a little too close to resistance. If it does go, it goes, but I would prefer to have a little more meat on the bone, right? So what I'm looking for here is a dip lower underneath the wedge low, a trap underneath 50.15 to 13, catch the sellers off guard trying to sell a break down, catch the buyers off guard with them getting their stops hit for a sucker stop location just underneath that little swing low, and slam the market one more time to the upside to finish the job and kind of kick the possible range going into tomorrow off. On the soybeans, still seeing that nice bearish momentum to the downside. We had a bunch of inventory forming here. This is the prior swing low area from yesterday going into today. Big chunk of resistance between 968 down to 67 and a quarter, and it did hold very well today, along with just a little bit of a channel. I have it drawn with two different lows here. Now the highs, very easy to find those. Pretty hard to miss them, actually. But when it comes down to the lows, you have two different options. You have the anchor low right here or the major low down here. Both will likely act as support, and they're fairly close together anyway, so it may not make much of a difference. But the one thing that it does make a difference on is the fact that we have a bear channel that blew through the bottom, if you're looking at the shallower one, which may mean that we could have a bullish correction up before we get the move down. Now, we are very low in the move, so the likelihood of that is low. The next option would be the overall low, which we have yet to test, and if that's the case, we're looking for sellers to continue it down and finish the job. We're very low in this drive down. A lot of sellers will have added in here or on this pullback up here, here, or here, selling all the way down here. There's not much left to be taking out of this trade, so I would rather wait for a better bounce, see if we can get a correction up, even up to 965, where we've seen quite a bit of support and resistance through here, and then push it down, just to get, again, a little more meat on the bone for us to trade off of. Right now, selling, if you were to sell right now at 962, that literally gives you 2 ticks of potential profit, just not enough to really care about. So because of that, I'm waiting for a little bit of a correction, get a bounce, even up to 965, preferably up to 67 and a quarter to 68, but the market sometimes won't give you that big of a bounce, and then looking to sell back down to a new low. And then finally on the S&P, nice run higher here, big blowout through the top. As soon as we opened up, it ripped to the upside. The indices just caught a massive run all the way up. Once we hit those highs, we blasted through prior month resistance that turns into support. They tried holding it, tried breaking down through it again, and snapped right back up. Now you'll notice we missed the high, right? We missed the new high. Now we made another lower high. We're forming a little bit of a wedge off the top. The buyers just aren't showing up to the party at the highs, which is showing us that if they do get back to the highs, they're likely going to sell out of their positions. They're no longer interested in buying this close to the top, and I can't say I really blame them. So what I would like to see here is a dip down into major support, especially if they can get a move down below to this 59.75 down to 59 area. That's where they tried breaking down that prior month support. In this case, was resistance at the time, turned support, failed, now it's support again. But see if they can revisit that area for, just asking basically, hey, sellers, we're here again. The buyers took over last time. Do they want it again, right? Or are the sellers actually going to show up to the party and take it lower? So I would love to see a pullback down to that area, find a buy off of that 59.75 down to 59 for a bounce back up. Given the wedge top, we may not make it to a new high, or if we do, again, I'm anticipating all of the buyers taking profit off at the highs, so I wouldn't look to hang on through that move for a new high. And if it does make a new high, probably not a very big one. So either way, looking to be a buyer on the S&P, but not right now, preferably on a little bit of a better price. So that's going to do it for the outlook. Looking at tomorrow's news, man, we don't really have anything. We had the GDP that came out today for the US. Tomorrow, the GDP is coming out for a lot of other countries. We have the Euro GDP coming out. We have the UK GDP coming out. We have the Canadian GDP coming out. I'm sorry, the European CPI, not the GDP. And we also have the European German unemployment change, but nothing for the US, at least nothing big as of right now. Now, obviously, news can change a little bit, especially with social media bouncing all over the place, like we saw today with Twitter posts causing market fluctuations. It's kind of a bummer when that happens, but c'est la vie, right? So when it comes to tomorrow's price action, it's the end of the month. There's no news for the US, at least not any big news. There's a bunch of news for outside of the US. It may be a really slow, grindy day tomorrow. So just play it safe. Like we always say, make that plan, trade the plan, follow those rules, and you'll be A-okay. Until the next time, we'll see y'all later.